The Middle East has been hit by a double storm the last months: low oil prices and a global pandemic. This has caused necessary cuts in the oil production by OPEC Plus countries, and energy projects in the region having been halted. Will we see a significant change in the role of the region coming out of the storms? Let us join Anne Ekern from ONS in her conversation with Dr. Florence Eid-Oakden, CEO and Chief Economist of Arabia Monitor, and Adam Sieminski, President at KAPSARC.
So what are the main changes in the Middle East that we will likely see coming out of this double crisis situation? I'll pass this one to Florence first.
I think on the economic front, there's a major adjustment to new realities that the region will come to terms with. The region has been aware for a while that the end of the big petrodollar cycle was perhaps a real end rather than just a cycle. And all the investment in alternative energy and unconventional energy in some areas has been a component of that realization. So now the pandemic brings this home in a more stark manner because of the manner in which it resulted in a collapse in the price of oil pretty much unexpectedly, and because of the interlinkage of that collapse in the price of oil with the impact on global trade. And so for the Middle Eastern economies, I think two things will become blatantly obvious. First is that foreign direct investment into the region is going to slow down, and in particular, foreign direct investment from Western sources is going to become weaker for a time to come. The macroeconomic adjustment is something we've all seen. We've started to see streamlining of expenditures, further fiscal revenue measures, more taxes being raised with concomitant inflationary pressures at a time when both growth and interest rates in the West are likely to remain low. So for those currencies that are pegged to the dollar, that's going to bring back a set of questions like the ones we had seen on the eve of the financial crisis back in 2007, 2008, when inflation had caused some serious currency pressures for those pegged currencies. However, at the time, oil prices were high. And this happened at a time when reserve positions were very strong in terms of spending pegs. And so now it's a different set of questions that will pose themselves over the next 2 quarters as inflation continues to rise in these oil exporting economies of the MENA region. And while interest rates remain low in the US, and therefore will have implications with respect to defending the dollar pegs in the Gulf economies. However, I think that the discipline that this sort of thing brings and the manner in which it accelerates the drive toward reform and the drive toward rationalizing expenditures and looking carefully at where policies can get the best bang for the buck in the Middle East and North Africa. All of that is a journey that had been underway before the pandemic and before the recent decline in the price of oil. And I can say that what we are living today will only accelerate that and reinforce the need to travel in that direction. So those would be my thoughts. I think the final thing that's related to the macroeconomies of the region is that China will emerge as, in relative terms, the last man standing or one of the last few standing with respect to the willingness to plow foreign direct investment into the MENA region. And that poses a further set of questions given where China sits in the world. Some good questions and some quite challenging ones, I would say, for the Middle East and North Africa.
Thank you very much. Adam, what are your perspectives on this?
Well, let me just add to Florence's comments, macro comments, that specifically on oil. This has been an unprecedented event in the oil markets with the effects of the lockdowns all across the world on transportation and other uses of oil that have dramatically reduced demand. And in response to that, there was another, I think, unprecedented event, and that is the cooperation within the G20 and several other nations associated with trying to stabilize the oil markets through a combination of activities to make sure that demand could recover as fast as possible, and to also look for ways to remove excess supply from the market in order to put prices back to a level that would be closer to a long-run equilibrium price. The efforts that were made by Saudi Arabia and other Gulf countries to encourage the cooperation between, and it included the International Energy Agency, OPEC, the International Energy Forum, and others to work together to stabilize the markets was a very, very important aspect, I think, in helping keep the economy from spiraling into an even worse situation than we found ourselves in.
So thank you. You alluded to my next question. How long, in your views, will it be necessary to extend the OPEC Plus's production cuts to rebalance the market? And also adding to that question, do you expect loyalty and adherence to the agreed production cuts for the rest of 2020?
Well, I think OPEC is actually in pretty good shape. The energy minister in Saudi Arabia, His Royal Highness Prince Abdulaziz bin Salman, met with all of the OPEC members and others to talk about the discipline needed to keep the markets again from I'd say spiraling downward. And you kind of go, well, wouldn't lower oil prices be a good thing from a consumer standpoint? Two aspects to that. The first is that because of the lockdowns, there were often cases where consumers couldn't take advantage of lower prices. But the real issue is that oil prices that could go below replacement cost levels could be very dangerous for consumers in another year or two if the level of oil prices is not sufficient to generate the investment needed to provide supplies. Now, demand could still be down somewhat as we make an energy transition, as the lingering effects of the pandemic continue to hit things like airline travel and that sort of thing. It's very important that the level of oil demand that is helping to meet economic growth and well-being. It's important that investment continue to take place in order to keep that supply flowing. And that's not going to happen if prices are below what is a good investment for companies engaged in this business.
Thank you. Florence, do you want to add to those two questions?
I thought that was extremely helpful in terms of insights on where the market sits today. The question as to how long the cuts will need to be on for and how good compliance is going to be, that's sort of, the expression, how long is a piece of string? I think it's going to be hard to say for the foreseeable future, say for the balance of this year. The cuts that have already been enacted, I would say, need to remain on because certainly the recovery of the U.S. economy has been slower than most people anticipated. This stimulus package from the U.S. has yet to be enacted. And there's quite a lot of uncertainty on the political horizon in the US with the elections coming up. How that then impacts growth globally, the US consumer is a major source of growth in the global economy, and so there will be impact of a slower U.S. economy on global growth, and that will in turn have its repercussions on global recovery. The other side of this coin is China. Although the Chinese economy started to recover based on Q2 numbers, there are two sides of this. In Q1 of 2020, there was still demand for Chinese products, but Chinese factories were shut. In Q2 of 2020, Chinese factories reopened by and large, but demand had collapsed. Global demand for Chinese products had collapsed. And the trade picture is obviously further complicated by recent pronouncements from the White House regarding the cessation of all talks with China regarding a trade deal. So all of these complexities result in difficulty in forecasting just how soon the oil markets will start to recover and just how long the cuts will be necessary for.
So, and that brings us back to the question of, well, can the discipline within OPEC last as long as is needed for the economy to recover, along the lines of what Florence just said? And I think the answer to that is the countries involved, I think, understand that it's that they are better off acting together to stabilize the markets than they are trying to go off on their own, creating an even worse situation. And I come back to the alternative to countries acting together, including consuming countries, to stabilize the oil markets. The alternative is a tremendous amount of volatility, and economists will tell you that volatility is a deadweight loss to economic growth, and it's generally speaking, it's a positive thing for consumers to try to keep prices in a manageable band.
Thank you. We kind of touched on this earlier, that we may see insufficient investment as a consequence of the production cuts. How serious are the consequences for the Middle East oil producers? What are they? To what extent are they suffering as a consequence of the production cuts? Florence, do you want to start off, or Adam?
Florence can. Why don't we have Florence go, and she can talk about the macro effects, and I'll talk a little bit about the oil income side.
Sounds great. Thanks. Florence, please.
Sure. So this won't be the first time in the relatively short history of the oil exporters of the region that the price of oil collapses. We have been in similar situations in the past. There was a time when the price of oil was about $7 a barrel. And so this was in the late 80s, early 90s. And then the price of oil recovered, and before we knew it, it hit 147 dollars a barrel. So the cyclicality might be flattening out a bit. However, the experience of having to adjust to lower oil prices is something that the oil exporters of the region know. That is partly the reason why they've built up sovereign wealth funds, and that is partly the reason why they are able to continue to have a fairly robust expenditure pipeline for major development projects, and also continue to invest abroad. The difference this time around is that oil might be lower for longer, and that the structure of markets is changing. The structure of energy markets and the composition of energy markets is changing. But again, that's not something that's new to the oil exporters of the region. And it did come at a time when they had already made the decision that accelerating diversification was more urgent than ever, and that diversifying sources of growth and attracting investment was more urgent than ever. I think the challenge that they face today is that the traditional sources of capital that have come into the region are themselves going to start to feel weaker. So the Western sources of foreign direct investment that have been the principal components of FDI into the region are now also weakened by the global crisis, and they're going to experience a diversification of sources of investment that's going to be accelerated by this crisis, namely toward investment from Asia, and those that are already aware of these trends and that have either engaged with the Belt and Road Initiative or considered engaging with it, along with engaging with other investors in Asia, such as Indian investors, such as more Japanese investment, etc. I think that is going to be more and more the way forward in reaction to weaker oil markets and therefore weaker exports.
Great, thank you so much. Adam, what are your perspectives on the consequences?
I just wanted to add that traditionally, and I think it's going to be true going forward, that oil producers in the Middle East tend to be low-cost producers. And as we move forward, even if oil demand remains somewhat soft, there's an advantage associated with production of oil in the Middle East that should, I think, continue to assist local and regional companies to maintain revenue. Florence is exactly right, though, that if prices are lower than they have been recently, this is going to add some strain to the budgets of different countries. But I think that most of the countries in the region are aware of this, have been fully aware of it. They, as Florence indicated, they've been diversifying their economies, including dramatically expanding the ability of women to be in the workforce, and things like this that will, over time, I think, prove to be tremendous drivers of economic growth. Reducing regulatory barriers and finding other ways to help the economy diversify away from oil, and including finding ways to keep oil clean, so that if there are emissions rules and climate rules associated with the use of hydrocarbons, that the producers in the region actually end up having an advantage of that relative to other countries. So I think that that everybody understands the nature of the crisis that's being accelerated by the combination of the pandemic and lower oil prices. But I think that a lot of steps have already been taken and are continuing to be taken to deal with that.
Thank you. So with all of these changes in the market that we've spoken about and the consequences related to this, is this likely, going forward, going to alter the position of the Middle East producers?
Well, from the producer's standpoint, what I would say is that they kind of understand the need to look for the technology that allows them to move forward in continuing use of the resources that are available in the region. I think that what we're really seeing because of the COVID crisis is the acceleration of a lot of trends that were already in place. But many of the governments here, I think, are actually dealing with that fairly well. The economic, the level of infections, for example, in this region is a pretty good record compared to a number of other countries. The level of economic reduction is not really out of line with what we're seeing elsewhere. So that what I would say is the economic management that's coming out of the crisis seems to be relatively good in a global context. And I find that actually to be maybe the main answer to your question. How will these countries in the region do? And I think the answer is, so far they've responded pretty well. And I think that if they are able to continue to show flexibility and innovation and how they're approaching these issues, it's going to be a very positive story, not a negative one.
Thank you. Florence, do you want to add to that?
I think, there's no denying that the current crisis places numerous pressures on the economies of the region, just like it has done on other economies in the world. I think that, if anything, they will come out of this even more strategic, even more nimble, even more willing to take difficult decisions, and with a population that is more cognizant of the pressures that surround it than previously. I think that what is not difficult to argue is that the level of comfort of citizens of oil exporting economies all over the world has been quite good, and they have been subject to much fewer difficult policy decisions than other countries. Norway is a country that discovered oil decades ago, but hasn't lived beyond its means as a result. I think it's not easy to demonstrate that the oil exporters of the region have, in various ways, during certain periods in the past, lived beyond their means. If difficult decisions are taken now and citizens understand why they are taken, I think that it can only be in the interest of these economies, because in fact they would be starting to function like normal economies, where some hard decisions sometimes need to be made and adjustments need to be made. So I think that the epidemic probably accelerates the inevitable. However, as I said a minute ago, the inevitability of reform and restructuring is something that the governments of the region had come to terms with prior to the recent crash in the price of oil.
Great, thank you. So a lot will depend on the country's ability to respond and move quickly and make the right changes. So while oil prices have partially recovered somewhat recently, they're still well below historic levels, and they do remain challenging for a lot of the producers, as we have touched on in our discussion. Maybe the million-dollar question, but when do you expect oil prices to stabilize? Should we start with you again, Adam?
Sure. I mean, you could argue that they've already stabilized, but maybe at $45, which might still be low from a long-term perspective of what price is needed to maintain supply, even in a somewhat lower demand environment. I think that prices will be gradually moving up as we become more comfortable with the economic outlook, given the pandemic. As we begin to see inventories being reduced, demand recovering in areas like individual automobile traffic and gasoline consumption, that'll drive things a long way. One of the final comments that I'd like to make along these lines, Anne, is that Saudi Arabia has been looking at something that we're calling the circular carbon economy. It's a kind of a follow-up to the idea of the circular economy and of how you can make resources work in your economy in a positive manner, not just from the standpoint of economic growth, but from environmental sides as well. The idea of the circular carbon economy for oil, and it's important for all oil producers, is that oil is quite compatible with a good environment, a good environmental outcome, and lowering of emissions. The idea of the circular economy is that there are 4 R's: reduce, which is be efficient and use somewhat less, but also reuse and recycle the resources, including carbon dioxide, and ultimately recover and remove carbon dioxide, whether it's done biologically through the natural plant cycle or done geologically. That if you combine all four of these approaches, what you end up with is hydrocarbons can continue to help provide for quality of life and economic growth, while at the same time being quite compatible with Paris Agreement climate goals. And that would be really good news for everybody if we could implement this kind of an approach.
Thank you. Florence, what are your perspectives on this?
I am optimistic overall that there are very good lessons being learned in the region from what is happening today. I remember the crash that the region was subjected to after the financial crisis. And I remember the restructuring that had to take place on the legal and regulatory and market fronts in the region for some areas of that to be structured, for economic wheels to start turning again, etc. It seems like distant memory now, all of this, but actually it wasn't very long ago. And the lessons learned have been really good ones, in the sense that the region entered this crisis on a much better footing. So, for example, in terms of economic sectors that have turned out to be winning sectors, or let's at least say sectors of resilience in the economy. We entered this crisis with a fairly strong appetite for e-commerce, for fintech, for health tech, for education technology, so ed tech, and all the companies that had been founded on the eve of the crisis of last year have done extremely well. Areas of telecoms, liberalization of certain areas of telecoms that the governments had held on to, etc. So I think that, in every crisis there's a silver lining, and sometimes, and we know for a fact from looking at the history of the region, governments aren't compelled to reform, open up, liberalize, rationalize expenditures unless they are forced to do so. And the private sector doesn't necessarily restructure and realign incentives and business models unless it's forced to do so. So if we look back and think that this was a really tough time the region had to survive, with the collapse of its main source of revenue by and large, but that it came out of it stronger and much better equipped to deal with future challenges, that wouldn't be such a bad thing after all. I think the one question people ask with respect to the Middle East and North Africa is whether economic pressures wouldn't eventually lead to another series of street protests resembling the Arab Spring. And so far what we found is that the region has been relatively quiet in those terms, and people have understood the urgency of reform on all fronts, given the pressures that both the region and the world are living.
Thank you. Thank you so much to both of you. Regretfully, we have to wrap up what's been a really interesting conversation. And I think we ended on a, somewhat, optimistic note in terms of the region has shown ability to change and maybe make changes quicker than they otherwise would and adapt. And if that continues, it doesn't look all too bad. Thank you very, very much for sharing your insights and perspectives, Florence and Adam. Thank you so much.